Hi, let's talk about currency exchange in a little bit more detail. How should you manage your investments and cash flow when you have assets in more than one currency? This video is not about currency exchange speculation, but rather managing the currency exchange risk in your financial situation from a financial planning perspective. First, you want to try to migrate your assets over time to the currency you will need for your future spending. Exchange rates tend to mean revert over time unless there is a structural change between two economies. This means that conversion rates will vary over time, but the long-term average tends to remain about the same. The average long-term exchange rate between Canada and the US is about 1.2 when converting from USD to CAD, or 0.8 when converting from CAD to USD. The average exchange rate depends on the time frame you are looking at. Some time periods will show an average exchange rate that is slightly higher than 1.2 when converting to CAD. We have not seen that average exchange rate since June of 2021. Since then, rates have trended higher when converting from USD to CAD with a high of 1.4497. If you have converted to USD over the last few years, the best chance you would have gotten would have been at a rate of 0.8306. The US and Canadian dollars have not been equally valued since July of 2008. With the current trend, you may be waiting a while if you're holding out for parity. When you're converting currency, keep three things in mind. What currency do you need for your future spending? What is the current exchange rate? And what are the capital gains tax implications of selling any investments to raise cash? If you need cash in another currency now, do a little shopping to find the best rate spread and make the conversion. Don't worry if the rate stinks, you don't have a choice. For future needs, converting strategically over time can help maximize your funds and minimize tax costs. If you know you need to convert at some time for future spending needs, take a look at the exchange rate every week or two. If you're converting to CAD and the rate goes above 1.4, like it just did a couple days ago, check your capital gains situation because it may be time to start thinking about converting. A good cross-border advisor will monitor this for you and let you know when conversion opportunities come up. Also check the rate when we have a market downturn. Your capital gains will be lower during a market correction, and it may be a good time to convert if the exchange rate is also in your favor compared to the historical average. It is rare that everything lines up perfectly, so try to think about how long it may be before you have another opportunity like the one you have now. The longer you wait and leave your investments to grow, the more capital gains you can assume you will have to pay in the future, and the higher the exchange rate would need to be to justify your delay. In other words, you should assume that a well-managed investment account will grow over time, so you can also assume that capital gains taxes will be higher the longer you wait to convert. If you need another currency in the future and the exchange rate is above the historical average, and you have little to no capital gains, you should consider converting before you invest so your capital gains can grow in the currency you will need in the future. For those of you who are U.S. residents or will be moving to the U.S. for retirement with Canadian dollar RRSPs, many custodians allow U.S. dollar RRSPs, which means you can be patient, wait for a time when you think the exchange rate is the best you're going to get, and you can convert without having to make any tax considerations. Converting your RRSP to U.S. dollars may also have some tax and investing advantages, which I will discuss later in another video, for those moving to Canada and leaving behind IRAs and other U.S. retirement accounts. I don't know of any U.S. custodians that allow Canadian dollar IRAs, so those conversions will have to wait until you take distributions, and it is usually best to maintain the tax deferral of the account rather than distribute and convert prematurely. Also, consider using currency exchange services like OFX or Wise, which often offer better rates than traditional banks. So, if you're planning to move across the 49th parallel, strategic currency management can go a long way in helping you to make the most of your money. Reach out to the contact information in the description if you would like to discuss your situation in more detail. At 49th Parallel Wealth Management, we are your cross-border retirement experts.